Hi folks, Scott here, and this is the wrap for Friday, June 21st. So today we closed below the 50-day moving average again, and we're below the 10-day moving average, but above the 200. And today was Friday, so I thought it'd be interesting to show you the results of fading gaps under similar historical market conditions, specifically fading gaps on Mondays went below the 10 and the 50-day moving averages, but above the 200-day moving average. Whoops. I'll use Gap Trader, my back testing tool, and we'll show you the results using an end-of-day stop. So a couple things stand out. Odds favor a gap up, about 50% greater chance of gapping up, so it'd be a short opportunity. And short opportunities do not look attractive using an end-of-the-day stop. It's been more prone to running the opposite direction. You're still in a bullish market, but you're short-term and arguably mid-term oversold because we're below the 10 and 50-day moving averages. So we've had some significant weakness of late, obviously, but we're still in a bull market. And on a Monday, more likely to run. Now, a big chunk of these profits, about half of them were one big one, so you might want to keep that in mind. Discount this number a little bit. A gap down looks attractive, though less likely. 13 of 18 using an end-of-day stop had filled, and a 1.8 profit factor. But I will tell you, I know for a fact, using MTG or intraday stops, that number is not nearly as attractive. So if we gap down, we could have some volatility, so you might want to prepare for that. And as always, in fact, and a gap up isn't necessarily terrible either. But as always, using MTG stops or an intraday volatility adjusted stop, which we use 30% of the 5-day ATR. As always, I would defer to our gap guides and my other analysis before I make my final decision, but you might want to keep that little nugget in mind. All right, let's talk about today's big juicy gaps. First, let me just remind you, 2 events next week. Be sure to sign up if you're interested in membership. The first one might be of interest to you. I'll break down and explain what you're seeing in these videos and answer any questions you have about membership, as well as show you some information about our member profile so you can determine if you're the kind of person that may do well or not. And let's see, the other thing we just announced yesterday and we're very excited about is our crude oil advanced study. So if you're interested in diversification, which everyone should be probably more diversified than I, because I do primarily trade the gap and primarily on the ES. If you're interested in diversifying, oil is a great moving market, and we're going to show you the historical data for the 15-minute ranges because they actually test it very well. So 15-minute range on oil means you would enter at or the 15-minute range would be created between 9 and 9:15, possibly setting up and giving you time to set up your orders if it was a good historical setup prior to our gap trade occurring at 9:30 Eastern Time. So anyhow, check it out. Be sure to sign up there. It is a paid event. This particular event, you get the study and you get the detailed webinar with it as well. All right, if you have questions, shoot them an email to tim@masterthegap.com. tim@masterthegap.com. All right, so this is what we showed in the worksheet. Going in today, we knew a couple things. I'll try to be brief and to the point. One, we knew there was a 58% chance of gapping up today based upon the worksheet. On very large sample sizes, only 42% chance of gapping down. So with that said, anytime we're over 55, I'm looking for long opportunities. I did one last night, which I'll show you in a moment. It was a nice, successful win. Great way to start the day. And you also see here that any gap up was historically attractive in terms of profit factor. And if opening between the high and the close, because this is the average of all 8 individual gap guides, 66% win rates. Those are strong numbers. And a gap down looked good as well. So it's a pretty darn good setup based on yesterday's big sell-off. OPEX Friday favored a gap up as well. That was one of the reasons I went long late last night. And also had very good numbers for shorting. And then in terms of unique patterns, we had an unfilled down gap yesterday as well. Very strong numbers and also favored a gap up this morning. So lots of unique data, all favoring a gap up. Show my pre-market comments. Last night's video showed fading up gaps. So this was really the key issue was, and I just sort of stumbled on it in last night's video, fading up gaps after closing down significantly over the past 2 days really reduced the chances of a win. It wasn't a bad setup, but wasn't nearly as attractive. And I even tested that, but for Friday's cowboy setups, which is when we opened below the low of 2 days ago, a very important consideration that shows momentum. If the gap size was small or mid-size, none of them improved these results. They weren't worse, really. Well, I think one of them was, but not much. Overall, neutral. And then another concern that's sort of related, but this was fading up gaps after a 20-day low close during a bull market, simply defined as being above the 200. About a 50-50 trade. So that was a concern. So that size of sell-off, I said, was a concern. And the cowboy setup is prone to volatility. We had lots of room to run stops. You needed to use at least a 7-point stop today, so I was concerned about that. And then we had that late rally. In fact, when I first posted this right around 9:20, I didn't mention gap sizes because, quite frankly, I didn't realize how much the gap had rallied in the few minutes I was typing this up. So I came back in about 9:25, or updated this around 9:25 after I explained it in the trading room. That was a concern because we opened just under that 40% level. So bottom line, is a half-size position for me. And I thought decent chance we'd test the lows, which is often what happens. If we don't bounce, then often we'll roll over, which is sort of what happened today, or is what happened today. Let me show you the trading action. It looks pretty muted, but actually these were big gaps. Open 1592.50, which is an 8.25 point gap. And the ES, which is my primary instrument up here. And actually, I don't have blowbacks on this chart, but I did. Actually, I do have it. I'll show you. Got a little bit lucky on my fill. Hold on one second. I'll drag this over. If I can. Got a little bit lucky on my fill. I was a little frustrated last night. Around 10 o'clock Eastern, watching the NBA Finals, and I saw price action. See, we're over here, right in this consolidation range. So by the time I got my order set up, it literally popped, and I didn't want to chase. I thought we'd come back, and then it broke out, and then it was sort of gone. So went in and set up an order to go long one tick above that tiny wick. Again, I'm doing this. I don't normally trade overnight, a handful of times, 5 or 10 times a year, but when the data's lined up as well as it was yesterday on the worksheet, I'm probably looking for it. So set it up to go long at 1587 overnight after I'd gone to sleep, got filled, went a couple ticks below it, got, that's lucky. I mean, it was a good concept, but it didn't all work this cleanly. My first target was +6, second target was +15, which put it just above 1600. Didn't quite make it up there, so I closed it out for +8 this morning around 7:30. I then reversed, not my core account. My core accounts I always trade strictly as I discuss on the website. But in other accounts, I do quite a few. I knew this was a really good setup. It was a juicy setup, so I set it up to go short at 1593 even. 1590. I'm trying to remember. Yeah, I got out at 95 with the +8. That's what it was from over here at 77. Sorry about that. And then by the time I finished my analysis this morning, I did do an early entry. Some other folks did the same, and I got filled at 93. It didn't gain me anything because we had rallied, and I got filled short at 1592.50. I'm just sharing what I did. But I was trading this in pretty much all my accounts today. Whoops, I'll take this over here. So that was my overnight trade for an average of +7. That was sweet. We gap up 92.50. I go short right at the open with my market orders. Sort of goofed it up, actually, as some folks in the trading room noticed. I didn't have the right contracts. I'd actually undercalculated my 50% levels, so I added a few more, and my weighted average was 1592.50. Short, didn't really take any heat. First target was 84.50. I got out at +8 there. Second target was 81.50, which was just above where the 4 p.m. close was down here, which is where the spiders would be filling, but I forgot they were ex-dividend. I forgot to mention that. Bottom line is I got a +11 on the last third, and I decided not to go for 78. The ES was the most bullish of these four indices today, and I told folks in the trading room I just didn't feel as comfortable. Of course, whenever I change a plan in the middle of the plan, it gets hit. I actually missed about a quarter tick right there, then it bounced and rolled over. Anyway, bottom line is averaged about 9 or exactly 9 points on the trade. Sweet trade in most of my accounts, actually all my major accounts, and that was a beautiful thing. Long overdue, so markets are starting to act normal again, and Did no other trades. None of the range setup set up well, and I don't do any discretionary trades generally after a winning or losing gap trade for that matter. So that was my day, and that is the wrap for Friday, June 21st. Have a great weekend.